It is Labor Day, and we made it to September. And my goodness, I don't want to get political, but how can you not get kind of political? I mean, it's coming, and that election is around the corner. And I know, Terry, you talk a lot about either way. There's going to be a lot of people leaving California, so I kind of want to start on that. And Monty, I know that the markets are closed today, so we're going to kind of have kind of a free for all, but we're going to give you guys some great information. Good morning, Terry.
Great to see you, David. Yes, big things happening in California. I think we're going to continue to see a mass exodus out of California, just with all this stuff going on. Anytime you open up a news channel, anything like that, there's just things going on there that you just can't believe.
Yeah, Monty, and I don't know how much you stay in tune with. You probably don't stay in tune as much as me and Terry do, but there's craziness in California. We're getting close to the election, and maybe again, we don't try to get political on our show, but Monty, maybe you touch on it just briefly and we move on.
Yeah, absolutely. Good morning. So yes, the word on the street is there's $150,000 being given out to illegal immigrants in California. It makes me think of Oprah Winfrey. Like, you get a house, you get a house, you get a house.
Wait a minute, hold on. Can I identify as an illegal? Well, Terry, anything that happens in California, I don't think anyone can even say that, wow, that's really crazy. They don't even say that anymore, do they?
No, it just keeps going further and further left. They're spending money they don't have. I've said this for years, long before I ever left California. There will never be enough money in the government to fund everything they want to do. That's why they continue to raise regulations, fees, all of these other things. There'll never be enough money because they keep coming up with programs like this. $150,000 if you're an illegal immigrant that doesn't keep you from qualifying for that money for a home loan for a down payment. However, I will say that right now that program is completely unfunded. However, that doesn't mean they're going to raise taxes just to fund something like that. So, how does an illegal immigrant qualify for a mortgage? Monty, is how many illegal immigrants are you doing mortgages for right now?
Right, right now, not many. I will say, kidding aside, people that have come to the United States from Mexico or other countries and they have an I-10, an individual taxpayer identification number, we can absolutely help them all over the nation get houses. And that's one of the specialties actually that we have within our portfolio division is helping people that are here paying taxes, working hard, that sort of thing, get homes.
Well, and I don't mind those people coming here as long as they're going to go to work and help people out. And I want them to come here legally, of course. But if they're anyway, we won't
I
go
have to
too
make
deep
my
into that.
disclaimer, guys. I'm serious when I say we don't get political, and it's pretty easy to make fun of California, and even if you're happy in California, but our disclaimer is, look, we're not trying to tell you to leave. We're just telling you that there's a better life out there, and if you are interested and you want to live in a free place and not have so much regulation, we can help you do that. So if you want to stay, stay, but if you want to go, that's why we're here. So that's what we do every week. And I want to move on to something that I'm super excited. I keep talking about it week after week. And yes, we are in September. It's September 1st. Is this the first or the second? I'm not sure.
Second.
Second. So we're deep into September, and there's going to be rate cuts, I heard, Monty. Talk a little bit about some fun stuff and buying a house.
Yeah, absolutely. So that big fun date is September the 18th. So we're nearly 2 weeks away from that date. What we saw Friday, that's what we've got as far as an update today. Is where we ended Friday. We don't have the markets open today to tell you what's going on. That'll again happen tomorrow. But as of Friday, what we saw is PCE, the personal consumption expenditures, come in. That's the Fed's favorite measure of inflation. And it came in within the range that they wanted it to be in. It showed that the headline or the all-in inflation rose about 0.155% in July, which was rounded in the media to zero point 0.2. They said, oh, it came in at 0.2, slightly below the zero point 0.2 that they said that they expected. So it looked like it was exactly the same. It was a little bit lower. So year over year inflation remained, though, at 2.5%, which was a little bit better than the 2.6% that they anticipated. Now, the core rate strips out all the food and energy costs. That's the main focus of the Fed. That one rose 0.161, and they also rounded that up to zero point 0.2, and that was slightly cooler than the zero point 0.2 that they expected it to be. the year over year core inflation, it remained at 2.6. It was 2.62 to be precise. Some estimates were looking for that to rise up to 2.7. And so the monthly core reading was also very good. That was 0.161. And when you annualize that under the Fed's 2% target, it's 1.93. So the last three monthly readings were also very tame. When you analyze those three, the 3 month pace we're seeing is under the Fed's target. It's at 1.7 right now. So the bottom line is inflation is moderating. It's heading towards the Fed's target. Despite these good monthly progress and year over year progress, it really has been difficult because of that low replacement value from last year. The way this works, you take 12 months, and so that's the way the Fed looks at it. And each month they replace 12 months prior with the new number. So you pull out last July's and you put in this July. So it's kind of funny when you start to realize, oh, is that how they're doing this? Yeah. So in some months you have a big number, and so when you get to that 12-month mark the next year and you replace it, it makes a bigger difference, even if the number wasn't shockingly big. So that's interesting. August from last year was very low. And so that's the reason I'm sharing that with you. August from last year was very low, but we're going to see good progress when we get to September because that replacement value for September was quite a bit higher. So the fourth quarter will be tough. Quarter one of 2025, though, is where we'll probably see a big improvement again because that replacement value for January of 2024 was pretty big. So we feel that there's a really good chance we're going to hit that 2% inflation target by first quarter of 2025. That doesn't mean rate cuts are waiting till then. Rate cuts are coming because they know we're on pace to get there already. We're already moving at that pace. So yes, September the 18th, that's the big exciting day. The Fed has been confirmed in everything that's leading up to this, all these reports that are coming out. That's also helping them have confidence that they're either going to do a 25 basis point cut or a 50 basis point cut, kind of doesn't matter. And then now there's strong belief that they'll do another cut by the end of 2024. So I want to break down a couple other things for y'all, and
Well,
then I'd love your
hold on, before you
yeah
go, I want
yeah
to, since it is Labor Day, I figured
yeah
you probably do have the crystal ball with you right there on the desk. And to our members, I definitely was going to ask you this today because, our members, they don't know when they want to leave. And
Hmm.
when they hear from a realtor and a lender, maybe we can kind of enlighten them. When is it better? 3 months, 6 months, 9 months, or should they wait the full year and have a full year to plan? So could you just look in your crystal ball real quick to our members and let them know what should they think about on timing?
yeah. Well, I would have to say that's a very individualized question, similar to when people ask me, well, what the rate would be today. Well, I don't know. What's your credit score? How much money are you putting down? What kind of a loan are we talking about? There's not a one size fits all. And so when you should leave depends on you in large part. So I want to know your individual situation. However, at a higher level, just speaking to the gross population here, the sooner the better, I would say, because the more rates start to drop, the more competitive it's going to get, the harder it will be to get as good of a deal on a house, which is what really matters. The rate does matter, but it doesn't matter as much as the appreciation. And so as rates go down, home prices will go up. The sooner you jump into that wave, the more of that wave you're going to get to catch going up. You'll probably refinance once or twice if you do this in the next couple of months, and that's okay. The people who have the most equity have done that. They've bought it at a low spot, and then they've refinanced it a couple of times, and that's how they have so much equity in their house because they caught that wave. You can't wait till the wave crashes down and then jump in with your surfboard and try to do something exciting. Just doesn't work. The wave is gone. You'll have to wait for the next wave now to catch it.
Well, that's great advice. Thank you, Monty, for that. And
Yeah.
Terry talks to people about leaving California constantly, 5 to 10 people a day, probably. And so, from a lender perspective, what do you say to people that are thinking about leaving? When should they go, Terry?
Well, I think if you just look at the economic uncertainty, Monty's talked about this for months, the fact that signs point to a coming recession or a coming slowdown. We certainly are slowing down. That's why the Fed is able to drop rates, is because the economy is slowing down. We know that more than 800,000 people that they said were employed actually were not employed.
Hmm.
So I'm curious to see this Friday what the unemployment numbers look like, and if they've adjusted for whatever incorrect data was telling them that we're getting more jobs than what we really were. The other thing I'd like to just address, and I know Monty will talk about his other data points also, is that let's not forget that the reason the Fed is able to lower rates is because the economy is slowing down. And Monty, I wanted to ask you, are there, other than unemployment, are there several other data points that may point to actually a half point drop when on September 18th?
It's hard to say. We know Jerome Powell and his group there make decisions a lot of times that don't make sense. So there's political pressure, especially with the election coming so soon. You know that they're going to get a lot of pressure as to which choice they go for, 25 or 50 basis points. Also, if we know that there's going to be another cut this year, I would say it's less likely that they'll do as big of a cut now. They'll wait, be careful. They tend to play it safe. But we've not seen anything that would increase the likelihood of a 50 basis point cut any more than we already had it at, which I believe last time I saw it was 33% chance of a 50 basis point rate cut, 100% chance of a 25 basis point rate cut. So yeah, Terry, also the another data point I was going to share to what you're saying here, it's really sad, and it would support what we're talking about with the economy being weaker. The savings rate, we got that information this past week too. It was around 8%. So the average American family saved at 8% pre-pandemic. That was cut to about 4% in January of this year. So when they looked at where were we pre-pandemic and then, hey, how much is every American family on average saving in January of 2024, it was cut in half to 4%. Is all that they were saving. But now, as of July, that is below 3%. It is 2.9% is all that the average American family can save. And that's showing that consumers are under duress. There's only so much savings that they have to deplete. And so this should eventually lead to lower spending and a slowdown in the economy as people just stop saving money. Eventually, you don't have any money to spend and you're not saving anything. And so it's sad. It really is that's the state of our country.
Well, and let's remember credit card debt is at an all-time high. Credit
Yeah.
card debt is not 5%. Credit card debt is 16, 18, 20 plus percent per year. So if you got a $10,000 balance, you're paying $2,000 of interest that year. However, I suspect many people have tens of thousands of dollars on credit card debt. So you're not certainly not going to save any money if you've got your credit cards maxed out. So we definitely are heading for some uncertain times. One thing I wanted to ask you about also, Monty, I was listening to a interview last night, and this gentleman says the coming refi debacle in the commercial real estate world is going to create a severe economic downturn because, I mean, you look at San Francisco, more than 30% of all commercial real estate is vacant in San Francisco. Now we know why, but have you heard anything about that? How that's going to affect the people trying to refi commercial businesses?
I haven't. It makes sense, but no, I had not. I had not heard that.
Well, because they all took out their loans when the Fed was at zero, and now they got to refi their because commercial loans are not 30-year fixed. Commercial loans are some sort of fixed for a certain period, then you got to refinance it. And in fact, I saw a story where a building was being constructed in San Francisco, an office building. They were going to spend $1 billion on building that new office building, and they just said, "Nope, we're not building this building now." They dug the foundation, started to improve it, and now they completely stopped construction. I think they said they're going to turn it into a park now. So it just tells you with Twitter leaving San Francisco, I'm sorry, it's called X now. You know, I don't know if you know this, but the Salesforce Tower, the largest office building, I think, on the West Coast, Salesforce has said they're very smart. They didn't own that building, but they're saying, you know what, we're not gonna keep filling up this building. Whoever the owner is, you can have it. So anyway, I just think that commercial real estate is the ticking time bomb that also could be a problem with the economy.
Yeah, people are working from home nowadays anyway, so the need for commercial real estate may be decreasing too for big companies.
Sure.
What I was going to say is I want to caution our members again, and you hear all these numbers and statistics. If you start getting too wrapped up in that, then you're going to drive yourself crazy. We're just giving you guys factual numbers and we're trying to give you advice. But at the end of the day, I mean, we say this all the time on our show. We've never really had a member that came back and said, I made a huge mistake by leaving. And everybody is always so happy and there is such a better life. And that's what we like to share. So be careful on, starting to look at too many numbers and waiting for the everything to align. And I think Monty has said this many times on our show that there's never going to be a perfect scenario, never. So, and I want to be respectful of people's times. Today is Labor Day, so it is a holiday. I hope you guys have the best time with your family and friends and have that barbecue and enjoy this supposedly last day of summer. And anything else in closing, Monty, that you can think of?
I'll remind everybody the jobs report is coming out Friday, so that will be interesting to see and will give us a better picture into what our update will be next week. And also, reminder that in most states outside of California, you can get a bigger home for a better price. So if you are working from home, you can get a home with a fantastic home office. So that you upgraded not just your life, not just family, but also your office. So yeah, have a great Labor Day.
And Terry, any closing thoughts from you?
Well, I take exception with one thing you said, David. When we were on our Southern Freedom Tour, we did talk to a lot of people who'd left California. They did make one mistake. Do you remember what that mistake was?
They should have done it sooner.
They should have left sooner. That's right. So that was the only mistake that they made. So that's we can give them some grace for that.
Well, we hope you enjoyed episode 16. And of course, we want to try to help as many people as we can. And by you liking and commenting and sharing our post and subscribing to our YouTube channel, it really helps us grow. And I do appreciate that. And I mean it from the bottom of my heart. Enjoy your family, enjoy your Labor Day, and we'll talk to you soon. Take care. Bye bye.